Hello everyone out there, this is Peter Harris, your Commercial Property Advisors, and in today's video you're going to learn the 5 keys to hiring a multifamily mentor. Now, I believe that our company can speak to what those 5 keys are, right? I'm going to give you 4 compelling reasons why, if you're looking for a multifamily mentor, go no further, check us out. Here's reason number 1, and I say compelling reason number 1, is look in the corner here. This is Chris. Chris is one of our students, still is, right? He wanted to retire as an airline pilot. He worked for United Airlines. Make a long story short, he went from 0 to a 90-unit apartment building, creating over $6 million in equity. Now he graduated to self-storage and built a $5 million facility with the money from his apartment building, and now he's worth over $12 million, right? How do you do that? Through mentorship, all right? Down below here, we have Bruce and Renee, who purchased 10 single-family homes and could not retire. They came to us. Today, through multifamily, one of them is retired, the second is on the way. Right here, I have Jacob, a 26-year-old former waiter now who just recently married. He purchased a 90-unit apartment building with no money down and is collecting money every single month. Check out his story. And last but not least, we have Yvonne up here, amazing young man who purchased a 12-unit apartment building and made a $750,000 profit. All of their stories are available for you to watch. So when I say we can speak to what the 5 keys to a great multifamily investment mentor is, this is what I'm talking about. All right, so let's go to key number 1. Key number 1. Key number 1 is to have 20 plus years of multifamily experience. I've been investing in multifamily since Bill Clinton was president. So that kind of tells you how old I am. But here's the key, okay? No matter how much experience you have, you must or you need experience in all market cycles, not just one, okay? Not just one. Most people out there that are teaching real estate have only experienced one cycle, and that is up and the peak. That's it. They haven't experienced the down, the recession, and the recovery where there's adversity. And as we know, adversity is life's greatest teacher. All right, so your multifamily investor must go through adversity and come out on the other side thriving. If not, I'm not sure what to say. All right. So here's a typical real estate cycle. Did you know that this cycle, on average, from one end to the other end is about 18 years long, right? So you need to make sure that your multifamily mentor has been in the business for at least 18 years so they can experience the expansion, the peak, kind of where we are today. And then what's happening later on is we're going to have the recession and the recovery. This is where most of the money is made. Make sure that your multifamily mentor has successfully navigated through the recession and the recovery. That's key. All right. Again, this is an 18-year period. Got it? All right. Let's go to key number 2. Key number 2. What key number 2 is very important, is for your multifamily mentor to have experience in all markets, okay? Not just one, not just a few, right? But to have dealt in all 50 states across this nation, right? Whether it's a big city, small city, urban area, it doesn't matter. Experience in all those different facets, because there's no such thing as a national real estate market. It's all set up into little sub-markets, right? North Carolina, one of our favorite states, has dozens of sub-markets that are all different, okay? You have to know those types of things. Look at Texas. Texas is from the high to the low, all in one city. You have to know those areas. We do, because we have what we call real-time data from all the properties that we have purchased throughout the years that we have records of, okay? Real-time data on what we call the prosperity trends. That's going to share with you where to invest, and most importantly, probably where not to invest, okay? So you have dealt in all 50 states, you have real-time data like we have, and next you need a proven property management system. Most companies don't want to invest with that because it's not a huge money maker for them. But for us, we feel responsible for getting students in a deal. We have to teach them how to operate the property with or without the property manager. Okay, so we teach our students what we call the 4 M's. That's having a system for the 4 M's of managing the money, the marketing, the management, and the maintenance. All 4 need systems or you're going to fail. Okay, you are going to fail if you don't have expertise in all 4 categories. So if you can have experience in all 50 states, have real-time data of where the best deals are happening, and have a proven property management system that's rock solid, you're gonna have sustainably successful students like we have. Okay, which leads me to key number 3. So this is exciting. Let's go there next. Number 3. Number 3 is to make sure your multifamily mentor has an extensive record of successful mentees, okay, that have closed deals and are very successful. We have this page that we keep track of. It's called a Real Deals page, and the link will appear. You can click on it and just get a sampling of the many closed deals that we have, and you'll find they're from every walk of life. Okay, we have engineers, all types of engineers that have closed deals. Check out the link there. We have truck drivers. We have IT, people working IT as managers. We have doctors. We have nurses. We have pharmacists. We have dentists. We have single moms and dads. We have husband and wife teams. And the list goes on and on and on. So just make sure that whoever you hire has an extensive record of successful mentees over the last 20 years. All right, let's go to key number 4. Key number 4. Key number 4 is to have a mentoring team. All right, so I'll use a basketball metaphor. I love watching the NBA playoffs, the basketball playoffs, and some teams win and some teams lose. So it's not how much talent you have, right? It's how much teamwork, intelligence goes into game planning to produce champions, right? And so you'll see the teams that win and lose. There are levels to playing at this high level. Same with commercial real estate. So you must be partnered up with a mentor who has a high level, high producing team. There's a quote from Michael Jordan, the GOAT, the basketball. He says, "Talent wins games, but teamwork and intelligence win championships." Right? So that's what we're about. You need to make sure that whoever you hire is all about this. Okay? Because, for example, our highly experienced team, one of our team members have owned and managed over 3,500 apartment units, right? Wouldn't you like to work with that person, right? Incredible. And by the way, every single person that comes to our company that's mentored as a protege, I get to coach them, right? And some days I am not available. I may be at a closing or something, so who can they go to? They're going to go to another team member for that day, right? So you have to have that backup, okay? You can't do this with one person operating at our level, right? And then also too, I'm not sure if other companies do this, but what other mentoring company meets 2 times a week for a leadership meeting where we get to discuss our particular students, their deals and their situations to maximize their deals and their cash flow, their operations, and marketing trends. So we do that, right? Twice a week on Tuesdays and Thursdays. It's a great meeting. We all come together and we figure out ways to make not only our students better, but us better as well, okay? Because it's about teamwork and intelligence to help our students, that's maybe you, win a championship with your multifamily property. All right, okay, that's number 4. Let's go to the last one, number 5. All right, here we are with key number 5. Key number 5 is you and your mentor must have a win-win financial arrangement. What does this mean? This means you must have what we call a mutually aligned financial interest between the 2 parties, okay? Meaning that if you make money, and then your mentor should make money. If you don't make money, then your mentor doesn't make any money. That way we can hold each other accountable and make sure that each person is holding up their end of the bargain. Okay? So it ensures the relationship between the mentor and the mentee is economically productive and sustainable over a long period of time. This is our business model, and it works quite well for the mentor and the mentee. Okay? Right. So basically the mentee, that's you, and the mentor agree to an upfront investment. Okay? So the mentee puts up money, we put up our resources, our training, our coaching, our availability, our industry contacts on finding money, on due diligence, on inspections, on title, on attorneys, on capital raising. All of that is at your disposal. Okay? And then as a result, we split profits 50-50. Okay? So we split profits 50-50 because our financial interests are mutually aligned. Each person has skin in the game. It's really important to make sure each party does their part of the job. Okay? All right. The next thing I want to share with you is really important. Is I'm going to make sure you understand that real estate agents, okay, and brokers, okay, are not mentors. All right, they're not mentors. And this is a novice mistake. All right, a lot of the beginning commercial real estate investors or multifamily investors think they can hire a real estate agent to be their mentor. It doesn't work out, and it's because of it's not a win-win financial arrangement, because there's a conflict of interest on how the real estate agent is paid. Okay, some of my best friends are real estate agents, and they do quite well. They tell me, Pete, I'm not a mentor. Okay, I'm a salesperson, meaning that they only make money if you close a deal. Okay, you don't close a deal, they're not going to spend time with you. Okay, that's just the bottom line. They have kids to put through school, mortgages to pay. They don't have a lot of time just to mess around. So you're in it to close a deal with them, or they're not messing with you. That's the bottom line. All right. So this conflict of interest on how they get paid is the main reason why they can't be a true mentor for you. Okay. So they can be part of your team, but again, not a true mentor. Got it? All right. All right. Thanks, everyone. Thanks for hanging out with me for the 5 keys to if you want to hire a multifamily investment mentor. Now, if you'd like to be part of our program, go ahead and apply to be one of our proteges. The link will appear on the screen. Or, hey, if you want to just learn more, go ahead and subscribe to our YouTube channel here. I'm also going to offer you my best-selling book, Commercial Real Estate for Beginners. The link will appear on the screen. Go ahead and read it and enjoy it. Thank you again, everyone, so much for hanging out with me. I'll see you at the next video.